Good afternoon, everybody. Welcome to this webinar on IR35, Where Are We Now? My name is Andy Chamberlain. I am the Director of Policy at IPSE, and I'm very pleased to be joined today by Nicola Hayman from Kingsbridge Insurance. Nicola, are you there?
Hi Andy, yes, I'm here. Thank you for having me on today's webinar. I'm delighted to be joining. So as Andy said, I am the legal manager for Kingsbridge. Kingsbridge, for anyone that doesn't know, work with just over 50,000 freelancer and contractors, as well as a number of recruitment businesses, just over 500 recruitment businesses. So what we're doing is kind of helping navigate all across the associated risks of working on a contractor basis, whether that's your business insurance, IR35 insurance, or I advise consultancy around IR35. So that's kind of exactly what Kingsbridge do as a whole group. So thanks for having me today, Andy.
Great, thanks. So just before we begin, could you just let, as you can tell, and as everyone is doing at the moment, we're all in remote locations here. So everything seems to be sounding okay to me, but it'd be very good to know whether it sounds okay to you. So if you could just let us know by putting in the questions box that you can see and hear us okay. You can see the slide in front of you, the big IR35 slide, and hear both Nicola and myself. That would be very reassuring for us. And while you're doing that, I will move us on to the first slide. And actually, just before I begin with this, I would also just encourage you to please do ask us some questions as we go through. We've got quite a few people joining us today, so we may not be able to answer all of your questions, but we do log all of your questions, and we will try to answer them at the very least in terms of stuff that we put up on our website following the webinar. And we will do our best to get round to your questions today as well. We're going to have some time for some questions at the end of this hour. So yeah, IR35, well, basically, where are we now? Well, we're stuck in limbo is where we are at the moment, really. Just to quickly recap, we know that, as I'm sure you'll all be aware already, that there were changes which were due to come in the private sector this April just gone. And in March, the government announced that that would not happen, that they would delay the introduction of those changes because of the coronavirus. Now, the government intends, and it did say this quite quickly afterwards, to lock in that legislation as part of this finance bill, which is worming its way through Parliament at the moment. They want to put that in and then make it effective from April 2021. But they want to get the legislation locked in now. They are being delayed in that, and you know, I've put a few things up, and some of you might notice I've put a few things up on the website saying, look, it's on the order paper for next Tuesday or next Monday or whatever it might be, and we're very worried about this, so write to your MP and tell them that they need to vote on it. Now they haven't, then they've removed it from two subsequent order papers. They've removed it because they haven't worked out how to do virtual debates and virtual voting yet. Of course, many people aren't actually travelling to Parliament. They're all in their own individual, all the MPs are in their individual lockdowns. When they work out how to do that, their intention is still to bring this in. However, as an extra sort of like grenade into the plans, there's been this House of Lords report, which we will talk about a little bit later on in this, which was very, very critical of the proposals generally, and what's more, of the idea that you might try and bring that into the finance bill now. And what they were really saying is, how do we know that, you know, essentially, if government decided this year not to bring it in April because they were worried business wouldn't be able to cope with the additional administrative burden in light of the coronavirus, how do we know we're going to be in any better position next April? Is the big sort of overriding question, and one which I'm not sure we've had a proper answer to, and a question that I think is a very, very valid one. That's the sort of issues that we're going to be talking about, but that's the sort of broad, I mean, in one slide, if you want to know where we are now, that kind of sort of covers it up. Don't really know where we are now. Government saying they still want to do it. Lots of other people are questioning the wisdom of that. And the virtual voting problem is sort of delaying things further, and there's a bit of uncertainty around all that. So just to remind ourselves what was going to happen, and I'm not going to labour this too much because I know that many of you would have been over this all before, but what was going to happen is they were going to make some changes in the private sector. They were going to make two big changes. They were going to shift the liability for determining whether IR35 applies to any particular engagement from the contractor, which is where it is right now in the private sector, to the end client. So end clients, the hiring organisations, were going to have to say, right, I've got this engagement over here with contractor, let's call her Susan, and I've got to work out whether IR35 applies to that engagement. Previously, it was Susan who had to do that, but now it's going to be me. I'm going to decide that. And if I decide as the end client, as a hiring organisation, that engagement that we have with Susan's limited company, that is inside of IR35, or that IR35 applies to that, then we're going to, whoever the fee payer is, and that might be an agency, they're going to have to ensure that tax is deducted at source. Essentially, Susan will now pay tax as if she is an employee, although she isn't an employee for employment rights purposes, just for the tax. So these would have brought the private sector rules into line with the public sector rules, because they changed in April 2017. And this was all supposed to happen this April, as I've already said. So that's what was going to happen. What did we have to say about that? Well, we have been staunchly opposed to IR35 from the very beginning of IR35 back in 99, 2000. That's why we were set up. And we were very much opposed to the public sector changes when they came in, because we could see what was going to happen is there was going to be a huge incentive for end clients just to say everyone's inside IR35 because it's too risky to do anything else. And that would mean that lots of people who should not have been inside IR35 were going to have it forced upon them, basically. And this was going to have lots of unintended consequences and knocks in terms of, you know, contractors leaving the public sector, contractors falling out with their clients, perfectly good contracts being terminated because of a row over tax status, all sorts of bad things. And we've been very much opposed to the private sector changes as well. And, you know, you'll probably be aware of that. And there's some photographs there. We were involved with this campaign, Stop the Off Payroll Tax. Very pleased to be involved with that. And we had a petition of Parliament, and that bottom picture you can see there. And then we went inside Parliament and spoke to a few MPs. That's David Davis there, who is one of the MPs who has spoken out very well on this issue and said that this is not a good thing to be doing. And we've done lots of things around responding to consultations, lots of research on this, and many of you would have fed into our surveys, and thank you very much if you have, and thank you for writing to your MP if you've done that before, and thank you for all the support that you've given us in trying to highlight the problems that are going to be caused by this. We're also on this thing called the IR35 Forum, which we sit on with some external bodies and with HMRC, where we try to thrash out what the problems are within IR35. And of course, you know, our view is really that those problems run very, very deep, but we are in there trying to make a difference. We also gave, so here's a photo of me, I always feel I have to apologise for that. It makes me seem like I'm an egomaniac, a great big photo of me on the slide, but we also gave evidence to this House of Lords committee, the Finance Bill Subcommittee, which ran an inquiry on IR35 and the proposals in the public sector. So that evidence session was earlier this year. It was probably about January, February time, I would imagine. And so we were really trying, you know, the reason why I've got this up here is because this report has now been published. And this was really Parliament's best attempt to actually scrutinise what the government are proposing to do here. During the election campaign in the end of last year, all the parties ended up under pressure from groups like IPSE promising to have a review of IR35. But the government review that we got wasn't what we wanted. It wasn't independently chaired. They were really looking at how to implement it smoothly. They weren't looking fundamentally at the policy and whether it's the right thing to do or not. The House of Lords Committee did do that. And it was a very thorough inquiry, and we were very pleased to be able to contribute to it. And I'm grateful to them for holding the inquiry. So sorry for this slide, which is a little bit text heavy, but I thought it might just be useful to remind ourselves of what the government has most recently said on this. So this was last Monday, and the government said that they remain fully committed to introducing these reforms. So they are saying, despite all these problems that we and others and the household people are raising, they are seemingly determined to sort of bullheadedly continue to plough into this. And they are saying that, they want to make sure that people who work like employees but through their own limited companies pay broadly the same tax as individuals who are employed directly, which is one of their favourite phrases. And of course, we would agree with them if people are working like employees. The problem is that they're not working like employees in a lot of cases, and they're still being asked to pay broadly the same tax as individuals who are employed directly. And that's the real problem that the government never seems to quite want to address. I've also highlighted the second part of that statement. It would just, he actually said this almost directly afterwards. He said, but we've done the delay until 2021. And he did say that we're going to use the additional time to commission further external research into the long-term effects of the reforms in the public sector, with the intention that research will be available before the reforms come into effect. Well, okay, so that sounds somewhat promising. I mean, that's a bit more like what we were asking them to do in the first place. But we would then say, so why put it into this finance bill now if you're going to do some research into whether that's actually a good idea or not? Why not wait and see? That would be our argument. But that was the Financial Secretary speaking in Parliament Monday last, so about 10 days ago, or whatever that is. So that's the position. That's what the government is saying. But earlier that very same day, this report that I've mentioned from the House of Lords Finance Bill Subcommittee was published, and that report found that the policy, that the whole IR35 in the public sector, the off-payroll working, whatever you want to call it, was riddled with problems, unfairnesses, and unintended consequences. These are all direct quotes. If there's quotation marks there, they're either a direct quote from the report or from the press release that accompanied the report. And this was a really quite a thorough piece of work, and I recommend that you go and look this up if you're interested. I know not everyone is quite as interested in the granular detail of IR35 as I am, but it is a really, really thorough piece of work that really examines all of the problems. And it says that what we need is a wholesale reform of IR35. We really need to stand back from this and think, is this really the best we can do to tackle problems of tax equality? Because this is a mess. And it raised that critical question about, look, the rules were deferred because of the current crisis, but how prepared will we be next year to take on the extra burden of this? What makes you think that we won't want to defer it then as well? And therefore, why would we want to push this into this finance bill? And I think the other point that I would like to sort of pull out, there's so many points in this report that you could pull out that I could talk about, but the other one is that final bullet point there around the number of companies getting rid of contractors in anticipation of the implementation of these new rules, because IPSE has had hundreds and thousands of communications from people who were told, first of all, they didn't even want to do an IR35 assessment of me. They just said they weren't going to engage contractors anymore. That's how scared the clients were of the IR35 rules. And we all know that happened massively in the banking sector. I am going to talk a little bit about that some more. So the chair of that committee was Lord Forsyth, and he really did do a good job of, I think, really getting into the heart of the problems of all of this. So IPSE is still campaigning. So the situation right now is that the government is still saying they want to bring this in, they want to bring it into this finance bill. We are saying, we are doing all that we can to raise why that is not a good idea. And we are working with the Stop the Off Payroll Tax campaign, as I showed you those slides before. And what we're really trying to say is, what is the government going to do right now to help those people who found themselves essentially jobless or without work as a result of those IR35 reforms, because now we're in a situation where it's very hard to find work. So these reforms really have, despite the fact that they were delayed, they caused an awful lot of disruption. Businesses were closed because of these reforms. You know, self-employed, genuinely self-employed contractor businesses had to close because they were working in sectors, particularly in financial services and in banking, where it just became the case that you could no longer work like that. And these were perfectly compliant businesses. I mean, this really is a damaging piece of legislation. We are hoping that clients are going to come back to contractors for this year at least, because now that we've had that delay. So we're hoping that some of those banks are going to say, well, actually, we can engage people. Right now, I'm not quite sure. I think financial services is actually doing okay compared to some other sectors of the economy, but still, you know, there are big problems with sort of finding work, and if you're out of work at the moment, finding new work now is more challenging than perhaps it's ever been in the last, well, since I've been working, I would imagine, which is a good 20 years, but probably a bit more actually. But I believe that's a delicate topic. What we're pushing for is for this to be removed, not just delayed, but actually abandoned as a policy, because it's such a bad policy. But right now, what we're saying is don't put it into this finance bill. So right now, the immediate battleground is around the finance bill, this coming finance bill. And the government seems pretty sure that it will sort out this remote voting thing, and I would have thought they will be able to do it. I mean, everyone else is managing to run their businesses from remote locations, so I would have thought that they will be able to do it. And once they do, they'll be able to do it probably at the committee stage, which will be, they can have a vote of sort of 20 members or so, get this into the committee stage, and then they can pass the legislation in that way. So what we're asking people to do is to contact your MP, get in touch with your MP and tell them why you think this is going to be so bad for your business. There are bits and pieces on IPSE's website about this already. There's also bits and pieces on the Stop the Off Payroll Tax website. There's a sort of briefing for MPs on there, which you can have a look at. So have a look at these tools, and please do reach out to your MP, even if you just send them a tweet and just say, I've just heard that you're trying to still put the IR35 rules into this finance bill. That is crazy. Please ask the Chancellor not to do it. I think that there's a genuine question which has to be asked of the Chancellor and of the Financial Secretary here, which is this the right time to be bringing in something so contentious and difficult and damaging as the IR35 rules? Okay, that's the sort of campaigning side. So in the meantime, the reality for a lot of people out there, as I've already said, is that clients have already terminated contracts, and a lot of them invested a lot of money in IR35 compliance before the delay was announced. And so what we're hearing is that some of them are still insisting on the PAYE arrangements. They're saying, look, before the delay was announced, we actually assessed your contract. We decided, rightly or wrongly, but they decided that IR35 applied to that engagement, and they're not going to accept now that they can just go back to paying you gross. They're going to say, no, you need to carry on working. We need to put you onto a payroll, whether that's an umbrella company or their own payroll. It's usually an umbrella company or the agency's payroll. Again, usually it's an umbrella company, and there's different problems over there, which we're not going to cover too much in this webinar, but feel free to ask questions about it. So they're saying, yeah, we're just going to carry on as if this is still the case. And some clients are being more pragmatic. We've heard that as well. We've heard from people who have said that their client has offered them a choice, and they've said, look, we kind of made that arrangement with you that you were going to go and work by this umbrella company, but if you want, we can just pay you gross again now, because we didn't need, because there's no requirement on us to do this. That's good if they're being pragmatic about that. That's good. A couple of things to sort of bear in mind with this stuff is that now before this doesn't, so this title, this slide, Status Determination Statement, or SDS, this was going to be a new thing, really. It's a bit like what they were doing in the public sector, but they'd now given it a title. So the SDS was something clients would have been legally obliged to provide an SDS to the contractors, and the SDS would explain whether IR35 applies or not and the reasons why it applies or not. I just want to make this clear right now that if those SDSs at the moment, they have no legal standing whatsoever. They're a worthless, meaningless piece of paper. The clients are not legally obliged to provide them, and you are not legally obliged to recognise them. They don't really mean anything. So if you have received an SDS, it is now worthless, and you can feel free to ignore it. However, that's not necessarily going to help you if your client says, well, we're still not going to engage you on a proper contractual terms and pay your company gross. If you want to work with us, you have to work with us via an umbrella company or on our payroll or something like that. It's very hard. IPSE is trying to speak to these clients and get messages out there that they do not need to do this, but some of them have taken it on themselves to do it anyway. I mean, particularly the banks that came out with their statements before, because as I said, what they were saying is that they are not going to do a sort of inside IR35 blanket determination. They're just not going to do any kind of IR35 determination at all. And they were saying, this has got nothing to do with the IR35 rules coming in. This is purely a business decision that we're just going to stop using contractors, which was clearly utterly nonsense. And the fact that all the banks did it pretty much at the same time demonstrates what utter nonsense that was. But nevertheless, now that they've said that, they're not going to row back from it. So they are sticking to their guns on this in public, at least, that, you know, that's the way it is. If you want to work with them, you have to work via a payroll organization. You have to be on a payroll somewhere in the PAYE RTI system, basically, is what the bank's saying. I have heard anecdotally that people have found their way back into the banks and that they're, you know, engaging them perhaps on statement of work contracts, which is it's not a get out of jail free card on IR35, but it's a good demonstration that IR35 would not apply to such an engagement. And there are ways that the banks are engaging with contractors and paying them on those terms of, you know, paying them gross. But that's all anecdotal. The banks outwardly are saying, no, we're not letting the contractors back in the old ways that we were. But I think that there might be some ways around that. But anyway, the SDS, if you've been given one of those and someone's saying, well, look, that's still, the SDS still applies. No, it doesn't. The SDS doesn't mean anything. Okay. Retrospective investigations. So just something to be mindful of, that in this year, IR35 does still apply. Those underlying rules of whether you're inside or outside of IR35, they still apply. They haven't gone away just because the private sector thing has been delayed. Remember, the private sector rule was all that was really doing was moving who had the responsibility for determining it and who would be liable for the tax if they got that decision wrong. Whether or not an engagement is caught by IR35 continues to be a going concern. And contractors are still at risk of being investigated, and it may not happen right now, but it could happen any time in the next 6 years. You know, clients may have previously determined before the delay that IR35 should apply, and now they're saying, okay, well, we'll pay you gross now. People have said, could this be used against you? You know, if there's some record of an SDS hanging around there. Now, what HMRC has said on that is that they are not interested in any SDSs that were issued. So, you know, they're publicly saying, we don't really care what happened before. If your client said that you were caught by IR35, we're not going to be too interested in that. However, if you found yourself in an investigation, if you're unlucky enough to find yourself in an investigation for this engagement, and it had been determined by someone else just a couple of months ago that IR35 applied to that, you know, it would be enough to make you feel uncomfortable, but not enough to make you turn your back on the work, and not enough to make you give up on the IR35 argument either. A couple of practical things that you can do. Get your contract reviewed, and bear in mind that if they had put you onto a new contract for this period of time, when they were saying IR35 applied, it's quite likely that contract won't be what we call IR35 friendly, and it may need to change. So get your contract reviewed and just check whether the contract that you're on now, which when you're working outside of IR35, reflects that you are outside of IR35, because that could land you in a bit of hot water. IR35 works on the basis that they like to look at the real arrangements of an engagement. So they look at, and I'm not going to go into it here, but they look at those things about, can you send a substitute? How much control over the work that do you have? And they look beyond the written contract. However, the way it's often been described to me is that HMRC will look at a contract, and if it's a strong IR35 friendly contract with lots of good clauses which point away from IR35, HMRC will say, okay, well, that's a written contract, but we're not interested in that. Let's look at the real arrangements. If, however, your contract is not a good, strong IR35 friendly contract, and it has lots of clauses in there which look very much like you don't have a right to substitute and you don't have much control, and there's a mutuality of obligation clauses are unhelpful in there, then HMRC will hone in on it and they'll say, aha, look at this contract. So getting a good contract in place is still important. So do get your contracts reviewed, particularly if you carried over a contract from the time when you'd sort of accepted you were going to be inside IR35. And tax investigation insurance is worth having. So if you are unlucky enough to be picked up by HMRC and they have a look at you, then you can insure against that, and professionals can come and help you to fend off that investigation by HMRC. If you're an IPSE member, you've already got it. So that's something to bear in mind. Right, that's sort of the end of my bit. So I'm going to hand over to Nicola now, but do please sort of send in those questions. I'm now going to sort of go into question monitoring mode while we listen to Nicola, so I can try and address some of those after Nicola's spoken. So over to you, Nicola.
Great, thanks, Andy. That was really, really helpful, and I actually think you were answering some of the questions as you were running through. So hopefully we have clarified already a few of them, but I have written a few down. So again, I might pick up on a couple as I'm running through.
Great.
So this first bullet point is kind of where Kingsbridge have always stood since the public sector changes, and before we get lots of comments, I completely appreciate that sometimes this is beyond your control. So if you are a genuine outside IR35 contractor, you are on business on your own account, you are running a legitimate business and you are providing a business to another business, you are not acting like an employee, you should be able to continue to work in that way through your limited company. And the legislation doesn't say anything to stop that from happening. If anything, a lot of the times they've pushed things out that have really gone ignored, which is talking around the fact how many are genuinely self-employed, and those numbers just seem to go unnoticed. And what we can't prevent, and I'll touch on this in a bit more detail, is the fact that clients did take this risk-averse approach and say, we just don't want to engage with limited company contractors anymore. So I completely appreciate that point. And as I move on to the next slide, I'll touch on the fact of what we feel can be done to try and stop that. But we have to take that with the fact that there are some end clients that will not change their decision. We already touched on the banks. I think they'll be one of them. It's difficult because we never got the introduction, so we never got to see the repercussions of these end clients losing a number of limited company contractors, then moving to competitors, and therefore going, actually, we need to reverse this decision. Because the legislation never came in, we never got to see that happen. So there is also still a bit of hope for April 21 coming around, and those end clients saying, actually, look at X competitor, they're still engaging limited company contractors. How are they doing so? Maybe we need to look at that. So, but obviously the main point is, what can we do now? So this kind of boils down to evidence building, and you'll all be aware of this. You need to build the case that you are a genuine outside IR35 contractor. And how do you do that? Now, we haven't gone through all the key status tests in this presentation, and I think most contractors have been kind of bored to death with what is involved in making a IR35 determination. But just picking up on a couple of points. So business insurance. Now, that's not one of the key status tests, but it's important, and it's something I obviously come up against a lot working for an insurance company, that you still get a number of contractors that may feel that they don't have to have business insurance in place. That's changed a lot over the last few years, and contractors now really seem to understand if they are working as a genuine business, they need to demonstrate that they are taking responsibility for the work that they're providing, and they do so by holding necessary business insurance cover, just like you would if you were running your own business. So I think holding that business insurance element has definitely become a lot more common, and we certainly see it all the time. So that's kind of one factor, and then we boil down to those kind of key status tests, the key indicators of being outside of IR35. How can you show that? Now, very highly criticised as CEST is, there's nothing wrong with going on the government website, having a look at CEST and going through some of the questions just to get a better understanding. What is even better is going further than that and having a proper review done over your working practices. Now, Andy already touched on contractual reviews, again, important, but there's no point having a contractual review and changing clause 2.5 if you're going to work every day and acting just like an employee. So you really need to make sure that your working practices reflect what you have in your contract. So whether you need to speak to a company to have a review done of both your contract and your working practices, all we're saying is you need to build your case to be able to evidence to your end client that you are a genuine business and you are providing your services through being in business on your own account. So that's what's really, really important. But like I said, I don't deny the fact that you could do all of this and you're met with an end client that's saying, we've got a PAYE only policy from now on. And I think that's what's happened. I think actually it's cleaned up a lot of contractors, and I imagine most of the contractors on this webinar, probably all of them, are genuine contractors, because they're the ones that want to listen about IR35, that are having these reviews done, that are having their working practices looked at. So there are a lot of genuine contractors out there that are being met with end clients that are saying, we are no longer going to engage you in that way. So what are we doing and how can we prevent this? Now, over the last 12 months, we've done a lot of work with recruiters and our contractor base. Also some work with end clients as well, but not enough. And that definitely is what we have learned, and you'd hope that everyone's learned something from the last 12 months. And definitely what we have learned is we need to do more work with end clients to help them feel comfortable engaging contractors. Part of me doesn't blame them that they get this piece of legislation put in front of them and they go, we just don't want to deal with this. But what they're not thinking about is the implications of losing that contractor workforce, and obviously a huge increase in costs if they're imagining everyone's coming on as employee or PAYE. So I think that's the issue. We say it too much, but it boils down so much to education, and we will continue doing that. And what we don't want to do, we've got IPSE there, and we've got other lobbyists out there that are helping us push against this. And I saw a couple of questions, saying, have we got anywhere? But, yes, we need to continue to push. There's no reason why we wouldn't continue doing that. But that doesn't mean that you can't, on the sideline, continue to educate, continue to do your research, because building that education for your end clients, even building that education for you as a contractor, building your evidence is really key, can hopefully lead to clients feeling a lot more comfortable. So that's definitely going to be our goal. Is, it seems a bit far away at the moment, and we have got banks that I don't imagine are going to change anytime soon, but we need to continue pushing towards that end goal, doing everything we can to make end clients feel comfortable that they can combat with this legislation, they can work with it, and they can still engage limited company contractors compliantly. So we will continue that support. And insurance, obviously, we offered our new legal insurance policy in 2019. So Kingsbridge had always done this, but what they've done is they've kind of built on this to make sure that we are offering the highest amounts in the market, the longest amount of cover, to really build something that is going to be substantial enough to cover you. So not only your defence costs, which can obviously be quite substantial, but also covering the taxes, fines and penalties, and also covering it for a long period. So I think there was a question around that 6-year period that Andy touched on. So yeah, it is 6 years, but only if they can prove, and beg me if I'm wrong, I think it's around careless behaviour. So
yeah, Nicola, that's right. Yeah, just sorry to interrupt you. Yeah, it's 4 years actually that they can do. Any tax investigation can go back 4 years, but they get to add on another 2 years if they can prove carelessness. And traditionally in IR35 cases, they've always managed to do that, and said, like, you know, if you didn't apply IR35 properly the first time around, it's because you were careless. So they can go back 6 years. But interestingly, one of the BBC cases, the one that was a split decision, which had three sort of defendants in the case, or 3 appellants in the case, I should say, they were stopped from going back those extra 2 years during that one for part of that. So there was an instance there where they only managed to go back 4, but as a rule, it's 6 years. Sorry, Nicola, go ahead.
No, exactly that. So yeah, we've obviously been building an insurance policy, and to get an insurer to agree to extend that policy after the policy has expired is obviously quite difficult. But what we've managed to do is extend that policy for a further 4 years. So if HMRC does come back around 2-3 years down the line, and you had a policy in place for when you were carrying out those services, it is going to cover you. So if anyone wants further information on the IR35 insurance, I'm more than happy to cover it either at the end or on a separate conversation, because we won't go into too much detail here. But that's just something that we have been doing. We have been building a new policy that we feel is the best cover that we could offer to contractors now, and then it obviously covering recruiters and end clients when they will be the liable party. So that was our kind of key message, that we had to build something that was going to be good enough to cover that. So if we just go on to the next slide, and I think this should lead us to kind of what I feel that you can do now. And like I said, I've said quite a few times, I completely appreciate it is not that simple when you are coming up against a really difficult end client. But these are all the things that we're doing, all the things that contractors should be doing at this point. So having a conversation with your clients and your recruiters, there's a lot going on at the moment. People probably don't want to be talking about IR35 and IR35 status, and you potentially probably not even working. But what we're certainly doing is taking this time to say, okay, let's do even more than what we did before. It's not ideal, and actually this is just a client's responsibility, and they should just take the legislation and they should just do the review. But we've all seen that it's not that simple. So continue these discussions. We will certainly be doing it. Continue it with your clients and continue with your recruiters. Feedback from recruiters is always, we're doing our best as well, but we are met with clients that just say, we just don't want to deal with this. So let's build on that. Let's build on fixing what went wrong, and, you know, using that Lord's report. There's so many great points in there that clients need to see, and they probably weren't aware of. So I would use that Lord's report. I think somebody asked where they could get a copy of it. If you just Google it, it will come up. But if you just put in off payroll working, treating people fairly, it should come up on Google, and it's on the Parliament Publications Parliament website. So yeah, definitely have a look at that. Understand the new process. You know, how do you make determinations? We've been spending kind of a long period of time building, looking at tools, understanding how you actually make an IR35 determination, which can then be insured. So our insurance would say, as long as you're outside, as long as you've been told you're outside, then the insurance is valid. That's all you need, is an outside determination. Obviously, at the moment, you make that decision yourself. post 21 that's going to be the end client making that determination. But understand the process of making a determination. Understand what defines your status. So there's key status tests. Definitely spend some time looking into those if you haven't already. Checking your insurances, so your business insurance, and have a look at IR35 insurance if it's something that you're interested in. Reviewing your contract and your working practices. Like I said, your working practices are just, if not more important than your contract. So make sure they are aligned. If we can get everyone singing from the same hymn sheet, your contractor, your client, your recruiter, there's nowhere for HMRC to go. It's kind of a perfect case scenario. Renegotiation. So yeah, you know, are you going to be working through PAYE? Are you going to be working through an umbrella company? There's definitely a renegotiation of rates that needs to happen if that's going to change in April 21. Other models, only where necessary. I'm hesitant to sit there and say, oh yeah, everyone shut up shop of your limited company in April 21 and move over. You should only be doing this where you feel comfortable and where you're happy to do so. If you feel that you are a genuine business and you're a genuine limited company working outside of IR35, you should not have to do that. Being aware of unscrupulous companies, we saw it massively when it came into the public sector, and we definitely started to see it in the private sector. And we see, you know, the loan charge taking up all the headlines. Just be very careful. If it sounds too good to be true, it is too good to be true. So don't start engaging with any company that's offshore or offering really high take-home rates. Do your rate research and speak to the experts. So we've got a large team at Kingsbridge, have a number of years of IR35 experience that are on hand to help if you do have further questions or queries or questions around your IR35 insurance. We can definitely touch on that a lot more. So I think hitting all of this as a checklist, you know, you might get to the end and you're still met with a client that's not going to change your status, and then it's your decision to say, actually, I'm going to stick, or no, I'm going to move. And like I said, until the legislation comes in, it's really difficult for us to get an understanding of what the world looks like. But continue to lobby, just don't rely on the fact that you think it's not going to come in and not do anything else. So that kind of be my key bit of advice moving forward. And then I think that probably leads us on to a question. There was just a few, so I might just pick up on it. Are blanket determinations illegal? This comes up all the time because we talk about the fact that we saw a number of end clients saying PAYE only or no more PSDs. Blanket determinations of saying everyone that works for this organisation is inside of IR35, they cannot do that. And HMRC has been very clear, and it's even in the guidance, that it doesn't constitute reasonable care if they say everybody's inside. Now, that's not what they've done. They've kind of got a way around it of going, it's just our policy. We don't accept limited companies, or we only accept PAYE and umbrella. So no is the answer to the question. It's not illegal. What you have seen some of these organisations do, it would only be that way, that they wouldn't be using reasonable care if they said everyone that works for us is inside. So someone asked a question around advertising a role, that they're still seeing roles advertised as inside of IR35. If every role they advertise is inside of IR35 and they're not doing a status assessment for that role, then no, they can't do that. And to be honest, like we said, at the moment, this is your decision. So if a role is advertised as inside of IR35 and you apply for it and you get the role, and then you determine yourself to be outside of IR35, that's fine, it's your responsibility, but I would say that's a risk. And I don't know, Andy, if you have anything to add on that, but you want to be slightly careful if you are being told by your client, we have done an assessment of this role and we believe it to be inside of IR35. I would just be slightly careful to completely ignore it and go, actually, I'm going to work outside and I don't really care. If you believe that you are working outside and the client's got it wrong, then that's absolutely fine. And we touched on the fact that these SDS statements that have been issued absolutely have no legal standing at the moment, and I would be asking for them to be destroyed and destroying my own and not listening to them. But if you've been clearly told this role is inside and you feel that it is, then it would be a risk to continue to work outside just because you're the one that has the responsibility to do so.
Yeah, I think that's right. I mean, that's why I was saying, you know, get your contract reviewed as well at that stage. You know, if you think that your client's got the decision wrong, and I think that in many cases they may well have done, because frankly, IR35 is very complicated. Basically nobody understands it. The CES tool is flawed, so if they've used that, there's a fair chance. I mean, there's so many times that someone thinks IR35 applies to an engagement, and then someone else thinks it doesn't. So you're likely to have a sort of legitimate question mark there. If you've been told it is inside IR35, get your contract reviewed, seek a bit of advice from elsewhere, and if you think actually I think they might have got that wrong, you know, get your tax investigation insurance sorted out. IPSE membership will do it, or Kingsbridge have products, and then you carry on. That's what I would do. But if you think actually I'm probably inside, they say I'm inside. If HMRC ever looked at this, they're probably going to say I'm inside as well. My contract looks like it's caught. I'm caught. Then you might want to think about how you're working there, or at least try and change the engagement. Try and change the way that you're working.
Exactly that. And yeah, there was a question on retrospective claims, which I think Andy already covered. Those SDS statements have no legal standing now. So
I think there was one question I saw on retrospective, which I jotted down somewhere on this scruffy sheet of paper. I think it was Diane who said, and I think what she was saying is it's that idea of, okay, let's fast forward now to 2021 and imagine that the IR35 changes have come in, and you know, I'm working there now in this year, right? I'm saying I'm outside. And then if after April 21, the client decides, no, you're inside, and I accept that and carry on working for them inside of IR35 after that, am I at risk of HMRC saying, well, hang on a minute, what happened in the year 2020 when you had the responsibility? And this is the age-old question about retrospective investigations that we were very concerned about before, and indeed we were concerned about it with the public sector as well. Now, the government have said that they're not interested in that. They have put out a statement, and it is online somewhere in the old guidance, saying that they're not going to use the client's determinations to go after you retrospectively. Yeah, I'd just be a little bit cautious about that. I mean, they haven't explicitly ruled it out either, and I think that it is likely to be a question that could be raised. So if you do decide to stay with your client and you've been working with them outside of IR35, then they put you inside, you decide to stay with them, I'd certainly want to have, you know, my insurance sorted out, and I'd also want to have a new contract for when I'm now working inside, and I want that contract to be pretty clearly that I am inside, because I want it to be different from the old contract when I wasn't, if you see what I mean. So yeah, I think it's definitely a legitimate concern, but I think HMRC have put some people at ease by suggesting they're not really going to go after that. You know, I still sound a note of caution within that though. Sorry, Nicola, was there any other questions you wanted to address?
I've seen one come through around sole traders. So yeah, I mean, I think we all wish that there was just another avenue of saying, I know what we'll do, we'll shut down our limited companies and we'll continue as sole traders. But actually the legislation that affected this, correct me if I'm wrong, Andy, I think it was 2014, we got the onshore and offshore legislation, which is slightly different from IR35. It's around supervision, direction and control, but there is a piece of legislation that is out there that I've done a lot of work with recruiters, and most recruiters have a policy that they do not ever engage a sole trader due to the fact that they take on the responsibility for the tax and making that determination. So unfortunately, sole trader isn't, you can definitely be a genuine sole trader as you can be a genuine outside IR35 limited company, but it's not really a route that everyone's suddenly shifting into from being a limited company.
Yes, but broadly speaking, there has been existing rules in place which make end clients and agencies responsible for the tax of the sole trader. So essentially, you've already got an existing set of rules which are causing the same problems for sole traders, which we're now talking about being caused for those working for their own limited company, which makes it very unattractive for those clients and agencies to work with those sole traders. So it's not a route out, is it? As you say, Nicola. A couple of questions.
I'll let you take some questions, Andy, and I'll do a bit of reading because I know we've got quite a few.
Yeah, I've picked up on a couple of questions here. So a few questions asking, well, what can the House of Lords do to actually prevent the legislation coming into place? I mean, we had this committee, a Lords committee, writing this report and doing the inquiry. What can the Lords do now? It's really quite difficult for them to do anything meaningful, and I'll tell you why. Because there is a convention in Parliament which says that the House of Lords does not block a finance bill, because a finance bill is seen as a sort of central kind of thing that the government has to do every year. They have to put a finance bill through. The House of Lords is not democratic, so it would be seen as being very democratic for a democratically elected government not to be able to pass a finance bill because the Lords have blocked it. So I mean, that has basically never happened. So I think where they can have influence is by raising the questions like they have done via this report, by shining a spotlight on what the government are doing, and by saying to them, have you thought this through properly? And maybe getting a few MPs, House of Commons members, raising those questions as well. Again, because it's a finance bill, very unlikely that a Conservative MP is going to vote down its own government's finance bill, and they've got a huge majority now since that sort of whitewash election result that they had. So I think that the best bet that we've got is to get those Lords and those MPs to be asking questions of the Treasury and saying, should we do this now? Is this the right thing to do in this finance bill? We've still got another finance bill that we're going to be talking about in the autumn. Maybe we can look at it then. And that's the line that we're going with. And we hope that you might be able to write to your MPs and get them to do that too. But in terms of the Lords actually just stopping it, I think that is unlikely. Okay, another question from Liz, and this one came up. Is IR35 relevant at all if the client is abroad? This was a really challenging question which came up a few times during the consultation period, basically within the last year or so, and lots of confusion about it. Broadly, the best answer I got on this was like this, and this was what HMRC told me at the IR35 forum. If you have an entirely foreign client which does not have any kind of premises or entity or existence in the UK, then IR35 doesn't apply. So if you're working with a client in Germany, but that client only exists in Germany, or at least might exist in some other countries, but does not exist in the UK, has no kind of branch in the UK, then you don't need to worry about it. However, if you're working with, say, Deutsche Bank in Germany, and of course Deutsche Bank do have a presence here in the UK, then HMRC will go after that UK presence for that. So essentially what they're saying is that the German client has to discuss with the UK client has to discuss with the German client and say, have you done your IR35 checking on this? I mean, in practice, how on earth is any of this ever going to work? I have no idea. And although I shouldn't do this, but I have been in the past. I've said, look, if your client's overseas, I mean, I think it's just so unlikely that you're ever going to get into any bother around this IR35 thing. So if they don't mention it, I wouldn't mention it. That's my honest answer. And if they, I don't think it will be on you to do it anyway. So that's my honest answer. But by the rules, yes, if there is a UK presence for that foreign client, then they should be applying the rules, and they could be held liable by HMRC on them. So that's the answer on that one. Simon made a point around employers NI and said, look, as far as I can see, this is all about employers NI. Simon, I think that you're absolutely right. This is the key thing. So if you actually look at how much tax someone who's working via their own company pays on, say, £50,000 compared to an employee on £50,000, you will see that it is pretty similar in terms of, you know, the overall tax that they pay. The big chunk of change that the revenue miss out on is that where someone is an employee, the employer pays employer's national insurance, which is 13.8% on top of whatever they pay the employee gross. If they engage that employee, if they don't employ that person and they engage them on a self-employed basis, whether it's sole trader or via their own company, then they don't pay that 13.8% at all. And that is the big, that's what this is all about. It's all about employers' NI. Now, the problem is that individuals are finding when they get pushed down to these umbrella companies, they're paying the employer, they're expected to stump up the employer's NI and the employee's NI and the income tax as well. And so there are some ideas. I mean, one way that you could get around this is, rather than doing all this complicated IR35 stuff, you could introduce an engagers tax, where you say if a hiring organisation wants to engage someone on a self-employed basis, whether they're sole trader through their own company, you just have to pay, I don't know, 5%, whatever it might be, on top of what you pay to that individual directly to the government. And that way you begin to close that gap. I'm trying to move my two hands up and down closer to one another at the moment, which you can't see, of course, which isn't very helpful. But you are beginning to close the tax gap between different forms of working, which is what IR35 is all about. It's all about the fact that it's trying to police this border, but it's such a heavy-handed, bad bit of legislation, and it causes so many problems. There are more straightforward ways, but employers and I is the key to all this. You're absolutely right on that one, Simon. Someone has asked a question around, Keith said, look, hasn't the Chancellor suggested, Keith, I'm paraphrasing because I can't see a question, but I scribbled a note about it. Hasn't the Chancellor suggested that there might be a fundamental reform of the tax system for sort of all self-employed people, the whole tax area around this, off the back of this COVID-19 crisis? And doesn't that present, perhaps you were suggesting, Keith, an opportunity to try and address this sort of thing? I think that there is a real opportunity there, Keith, and I think that the Chancellor should be looking at exactly that and saying, maybe now that we've sort of had this kind of halt to our economy, and we might want to just take stock now and think, hang on a minute, is this, in the post-COVID world, are these tax systems the right way to go? What the Chancellor actually has said is that because he introduced this scheme called the Self-Employed Income Support Scheme, which actually mainly is for sole traders, it is just for sole traders, it's not for limited company contractors, so many of you on this won't be applicable to you anyway. But when he introduced that scheme, which was a way of basically giving some money to sole traders, he said the quid pro quo for all this is we're going to put your tax up. Now, what we're saying on that one is that's not the right way to do it. Let's have a proper look at the tax system, and let's address things like class 4 and class 2 national insurance, which is paid by sole traders, which is all a bit messy. And maybe there is something that we can do to both simplify it and maybe get some more tax into the revenue there as well. But simply just pointing your finger at a group and saying we're singling you out to put your tax up, I think that's just going to put people's backs up. Keith, what we should be doing is more like you've suggested, and having a fundamental review of the tax system so that we can sort out things like IR35 as well. Have I got any other questions? A few people have said, well, do you think that they're likely to happen, these changes? We've gone on here about how, well, the government are saying this, other people are saying that. What's our opinion on this one? I mean, I'll be interested to hear Nicola's opinion on it too. I think that the government looks like currently they are determined to press ahead, and they have a very big majority, so we are up against it. But I'll tell you this, IPSE is going to keep on campaigning, because we think that there are so many legitimate, valid questions that need to be asked about the validity of pushing through with this legislation, and we're going to keep on asking those questions. I think that there is a chance that we might get it delayed. Who knows what's going to happen with the economy? So there is a chance, and I think that chance improves if we don't get it into this finance bill. I don't know what you think, Nicola, on that question.
Yeah, I think exactly that. I think by no means assume that it's definitely coming in. There's definitely things that can be done, and we're lucky that we do have the likes of IPSE and other trade bodies that are doing all of this lobbying. And sometimes they need the extra support from contractors to really kind of build the case to show how many contractors it's affecting. However, also the reverse to that, don't rely on the fact that you think it's not going to come in or it's going to be delayed and not do anything. And to be honest, that's usually more of my message to clients and recruiters. don't just sit back and wait and rely on the fact it's not going to be coming in, but to contractors, help support and promote, as much conversation that you can have with local MPs, with your trade bodies, to keep pushing the message. But again, sometimes you have to look at it proactively, not positively. It's a very nasty piece of legislation, and I completely understand why people look at it so negatively. But sometimes we just have to deal with the fact that the government are going to need to get back as much revenue as possible. And chances are they haven't given any inkling so far that this won't be coming in. So all we can do is kind of wait and see, but just don't rely on the fact that you don't think it's going to be coming and therefore you're not going to worry about it. You'll need to start those conversations with clients again as we start to potentially get a bit closer, just to make sure that you're completely aware of what's happening.
So we're sort of at the end of our time, and lots of people are coming in with some comments on this discussion at the end. And I mean, Alan has said surely the flexible workforce will be even more important to the economy as we try to recover from this crisis. I completely agree with that, Alan. I think that we need to be deregulating right now. And this is a huge, burdensome regulation that they're putting in. Deregulation is surely the key. And in fact, the government are talking about deregulating. Bayes had been talking about it a little bit with us, and what deregulation could we do? It was mentioned on Newsnight last night as well. I mean, here's one right here. But anyway, Nicola, were there any other burning questions you wanted to address? Because we are at the end of time.
There was quite a lot of questions around insurance. Does it include VAT investigations, retrospective cover, all of those kind of things? I am more than happy to pick up on those conversations if you do. My email's on the screen, so if you want to just drop me an email, I can pick that up separately with you, just gives a bit of clarification around what are different insurances, because I know we kind of sped through it quite quickly. But yeah, so if you want to drop over an email, I'm more than happy to pick that up on the side.
Yeah, and we also IPSE would be more than happy. Perhaps if people are interested in it, we could do a webinar on exactly what your IPSE membership gets you and all the different benefits and all the different insurances, and go into some detail about what exactly you're covered for on those as well. Just a quick plug for some future webinars we've got coming up. So in 2 weeks' time, I'm pleased to be able to say we've got Ed Davey, Sir Ed Davey, coming in from the Liberal Democrats to talk to us about the various COVID schemes and how they're working. And I'm sure I'll get a chance to ask him a question about IR35 as well, because he's been outspoken on that and was during the election campaign. And then the week after that, we've got the Small Business Minister, Paul Scully, coming on to our webinar too. So we'll be plugging those on our website, and you can sign up for those if you're interested, and we can talk to them all about the COVID schemes. And there have been 1 or 2 questions on the COVID schemes, but we've done a lot of webinars on that, and so this one was just about IR35. So yeah, so look out for these future ones. And I think it just remains for me to say thank you very much to Nicola for joining us today, and thank you to all of you who have tuned in on this fine sunny day and for asking all of your questions. We're really grateful, and take care of yourselves. Goodbye.
Great. Thanks for having me, Andy. Thank you.
Bye.